This is Tom Fox. Welcome to the newest edition in the Compliance Podcast Network. My latest podcast, Compliance and Coronavirus. As the voice of compliance, I wanted to start a podcast which will help bring both clarity and sanity to the field of compliance, the compliance practitioner, and indeed the compliance profession during this worldwide health and healthcare crisis. Taking up a variety of topics as diverse as working from home, to sporting events, to the role of the board of directors, to crisis management, to the role of supply chains. We will look at all of these in this podcast. If you have a topic you'd like covered on compliance and coronavirus, please let me know. I'd be happy to do a podcast on it. My guest today is Ray Dookhie. He is Managing Director at K2 Intelligence Fin with more than 25 years experience in compliance, integrity, risk monitoring, and management. His experience spans multiple industries with focus on financial services, life sciences, real estate, and construction. We take a look at fraud, audits in the age of coronavirus, and the reopening of the national economy. Hello, everyone. This is Tom Fox back for another episode. And today I'm joined by Ray Dookhie. Ray is a managing director at K2 Intelligence Fin. Ray, first of all, thank you for taking the time to visit with me.
No worries, Tom. Happy to be here with you today.
So, Ray, could you start off by telling us what is your role at K2 Fin?
So I joined K2 last fall as a managing director. I focus on helping clients both in the public sector and the private sector assess, investigate, mitigate fraud and integrity and regulatory risks. Some of the primary things that I do is help them conduct audits, monitor, investigate fraud, waste, and abuse. Also help them develop anti-fraud programs and controls to prevent or detect fraud, waste, or abuse.
Ray, that phrase, fraud, waste, and abuse, rolled off your tongue like you've said it about 200,000 times previously. Many of my listeners may have heard it several times, but I suspect the American public is about to hear it a lot more over the next 12, 24, 36 months. And so, and that, of course, is based upon the huge input of injection of money into the U.S. economy, both in terms of the stimulus package the administration put forward, but also in purchasing things such as PPE and other health-related equipment and services around the coronavirus health crisis. I say all that by way of a long-winded introduction of what do you see as some of the top challenges for compliance professionals in your specialty?
Thanks, Tom. That's a great point and an interesting question and very relevant in the time. I think, first of all, let me say, I think fraudsters are like chameleons, right? They change their appearances to take advantage of the current environment. And the global pandemic, to me, has presented lots of opportunities for fraudsters to take advantage of. In the recent months, you may have seen some of these media reports as well, Tom. There's a vast-ranging fraud schemes, all of which I think present some interesting challenges for our compliance professionals. Just recently, I was reading an article that the state of Washington reported that unemployment fraud may hit about $650 million. Shortly thereafter, the FTC, Federal Trade Commission, issued a warning regarding fraudsters filing false claims for unemployment benefits for those who have not filed their claims as yet. We've also heard reports that certain foreign government officials are taking advantage of the situation as well. They're setting up fake COVID charities to receive contributions, or quote-unquote contributions, which are in fact bribes from corporations. In April, we've seen an interesting case in this time, and that is a financial reporting case, a financial reporting fraud. China-based Luckin Coffee disclosed that its chief operating officer and several other employees fabricated over $310 million in sales. Around the same time, the SEC and the Public Company Accounting Oversight Board issued a statement or warning that this is cross-border investing presents some significant risk for corporations and investors in that these foreign jurisdictions don't have the same level of disclosure requirements as companies in the U.S. do. So I think all of that kind of presents some interesting challenge for our compliance professionals today. One, we're seeing that there may be a lack of availability of information to conduct adequate diligence on those clients, customers, or employees, new employees that are coming on boards, or even vendors that are critical to the organization. We're also seeing a lack of the ability to conduct on-site audits or visits at some of these critical vendors, and that's presenting some interesting challenges over the long term. And lastly, a subtle point, but a very powerful point, and that is, in this environment, there may be greater incentives or pressures on owners or management of organizations to falsify financial information in order to, one, meet their investor expectations, or to obtain financing, as you mentioned, and to take advantage of some of these government funding and loans. So all, I think, which presents some interesting challenges.
Ray, on the next question, it's going to be a two-part question, but it's pretty broad, so I'm going to break it into actually two questions. And the first is from a programmatic level and a much more holistic level. What kinds of conversations are you having with your clients about what they need to implement around compliance for these issues as we begin to move out of the depths of the health crisis, perhaps into the reopening of the economy?
Yeah, great question again. I think, the conversations that I've had so far with our clients have been, one overarching comment is that we should be prepared for the unexpected. And I know that's sometimes a bit difficult, but I think there are some fundamental things that clients need to do and take advantage of. And that is, one, understand where the vulnerabilities are. The times are changing to some extent. A company's operations or their financial management may be changing because of the COVID situation. And as a result, the risks may be different. And so we are encouraging our clients to refresh their risk assessments if they've already done one, to refresh it to address some of the new and interesting opportunities. And then second, once they have a handle on what the fraud risks are, communicate that out to their folks, right? So everywhere in the organization, from frontline sort of professionals that are handling some of the day-to-day touch points with customers, all the way to the back end reporting of those transactions in the company's books and records, remind those individuals that that there's still opportunities for fraud, and to be vigilant and mindful that fraud can occur in the organization. And I think a third item would be, just have an incident response plan, right? So in the event that something does go wrong, what should you do to immediately respond to those situations appropriately? And we've seen some instances where there have been cyber hacking and cyber frauds, and criminals are taking advantage of organizations. It's extremely important to have an incident response plan in the cyber capacity as well as in the broader compliance capacity. And I think some of the things to organizations don't really think about, Tom. I think, it's been normal operations for some time, and then all of a sudden they may run into regulatory risks because now they're receiving government funds, whereas in the past they have not been subject to regulatory scrutiny. And so that's just one example of the new and changing business environment for organizations to refresh their risk assessment, refresh their misconduct assessment.
Ray, I found it really interesting that you sort of led with that point. Last week, the Department of Justice released a 2020 update to its evaluation of corporate compliance programs. And one of the first things they said was a much more robust, not necessarily, I shouldn't say robust risk assessment, but a more ongoing risk assessment. And moving to, don't think about it as a 1 year, 3 year, 3 month, 6 month, be much more programmatic about it. And when you see risks changing, whether it's because of a new market, new product, new service, new something, or new regulation or new injection of capital. All of those are great reasons to assess your risk at that point in time. So I found it really interesting that you really think that's one of the keys at this point in time. And now if I could turn it to some more tactical steps. Once again, what are some of the conversations you're having with your clients on some of the specific tactical steps, perhaps as we move to a new phase? I hate to say the new normal, but at least a new phase of where we are in the coronavirus health crisis.
Sure, Tom. Again, I think, there are probably, lots of things that organizations can be doing tactically in response. But I think, a couple of things that I've heard specifically are around clients struggling with receiving full or complete set of information regarding their vendors or third parties or their customers. Typical sources that they may have relied upon in the past may not be available. And so we've seen clients reaching out to us and organizations like us asking for our assistance in tapping into some of the large databases or data sources that are publicly available, and also not publicly available in some instances, and could be just human intelligence. And so they're reaching out to firms like us, asking us for help in assessing the integrity risks and concerns with their vendors. In certain cases where certain of those third-party intermediaries or high-risk vendors are operating in foreign jurisdiction, they're reaching out to us and asking for help with local resources, perhaps, to provide some of that requisite knowledge and insight regarding potential integrity concerns in the local market. So we see that as one area. I mentioned earlier that I think the inability to conduct site visit or audits, given that many of the operations are closed, what we're doing now for some of our clients is we're conducting what we're called virtual office visits, right? So we can't go out there, but we're conducting the visits virtually through Zoom or Skype or a net meeting. And the purpose of those visits, they're sort of a precursor to an actual visit. I don't think that we can replace an actual office visit and that one-on-one contact and interviewing of an individual. But what this allows us to do in this pandemic is to have the ability to have a discussion with the vendor and their management, and from that make a determination, and obviously reviewing their documents as well, and then from that make a determination whether we think that there may be indicators for a follow-up specific office visit. So I think that's a review of documents, and that virtual interview helps to address that. Another area that I think many organizations don't really pay keen attention to, and that is their financial controls. I think it's sort of set up our controls, make sure it's functioning efficiently, right, and set it and go, right. That's the mindset. But that is perhaps the one area where you have a great ability to spot check things and identify potential fraudulent transactions. A lot of times these frauds, the evidence is in the hands of the accountants or the finance folks, and they don't know what to look for. And so having those individuals understand the risks as part of the risk assessment, step one. Step two, enhance the controls around those frontline personnel that are, touching the information that's coming in from clients and vendors. They have the ability to screen and review those transactions in great detail. So providing guidance to those individuals about what to look for, what can go wrong, what are the fraud schemes, and having, I think another thing is just to have that secondary set of eyes on transactions. So, back in the day when Siemens had their issue around FCPA, you had there's discussion of the Siemens the four eyeball system, right? So it's two individuals that had to look at every transaction before it moved forward. Obviously, the issue there was management override of controls, so that throws everything out the window. But I think reminding folks that take a second look at certain transactions, spot check transactions. Also, having some of the financial planning and analysis personnel, have them do some horizontal and vertical analysis. That just means simply looking down and across the financials to spot potential variances or outliers in certain cost categories or cost line items. And from that, really assess, does that make sense? does these metrics make sense given what's happening in the environment? Are costs truly going down, or income or revenues truly going up during this period? And investigate those matters and really get to the bottom of whether they make sense or not. And so just a few things, Tom, just to give you a sense of what I've been recommending to my clients.
Ray, would picking up on your last point on internal controls, would now be an appropriate time to even do a gap analysis to determine both, are there any gaps in our controls, but also, do we have controls that really are either no longer relevant or that we actually can't fulfill because of the current status? And there I'm thinking of, if you have a control that requires an in-person visit, and you physically can't do that. If you don't do that, you've now violated your controls. If you haven't noted that or justified it or had documented your exception, that could conceivably be a violation. So would now be an appropriate time to do a gap analysis, or is some other time more appropriate in your mind?
No, I think it's absolutely appropriate. And, I mentioned at the outset as one of the things that organizations should do is the risk assessment. So I see the risk assessment and the control assessment, or gap analysis, as you call it, they go hand in glove, right? Once you've identified the risk, your next logical step is to then determine whether you have adequate controls to mitigate those risks. And then what's your residual risk or end risk. And I think that's a perfect opportunity to now it's a perfect time to do it, because you need to understand that the times are changing and your operations are changing, and subsequently your risks are changing. And so opportune time to do the risk assessment and also evaluate your control environment.
So, Ray, unfortunately, we are near the end of our time, but this has been a fascinating exploration. And frankly, as the economy reopens and we move into whatever later phases we're in Qs 3 and 4, I hope perhaps I could call upon you for some additional guidance for my listening audience.
Absolutely, Tom. It was a pleasure being with you here today. I think, we have lots more information that's available on our website, K2.com, K2intelligence.com. We've got great information on LinkedIn and Twitter as well. So if for you and your users to jump on board and learn more about the K2 family and what we do.
Well, thank you again.
Welcome. Take care.
Hello, everyone. This is Tom Fox again. I'd like to thank you for listening to this episode of Compliance and Coronavirus. This podcast posts 3 times a week at 10 a.m. on Tuesday, Wednesday, and Thursday of each week. That's 10 a.m. Central Time. I hope you will check out our episodes as we post during this health crisis and economic dislocation. This month on The Compliance Life, I'm featuring Ryan Robillé, who talks about his journey to the CCO chair. I hope you'll join me for another episode of Compliance and Coronavirus, where I bring clarity and sanity to the business executive and compliance professional around these most serious issues.